Hello, traders. Gary Wagner here, just about 2 o'clock in Honolulu, 8 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 27th day of March, 2020, and this is the daily report for gold and silver, our weekend review, and we certainly saw a week of action. Realize that gold gained $124 on the week, even though it closed at around $1,630 after hitting a high of almost $1,700. So we're looking at about a $200 range this week. That all because of the current crisis due to the coronavirus and action taken by the Fed, and now fiscal stimulus taken by the United States. Globally, the virus continues to grow, and we have reason to believe that we should see gold move higher from this point. Let's take a look at our price board and then to our technical studies. Although gold futures did close down for the day, they certainly made some gains for the week. When we take a look at our weekly chart, and that is this chart on the left, this green candle represents the action this week. Of course, it did make a higher high and a higher low than last week, but when we look at these particular tops that have come in over the last, say, 4 weeks, we can see that we have definitive resistance right at around 1,700. Market closed today down $20.60, 16.30 60. Now, the one thing that we can say is that we were able to pull profits, but we did enter the trade at 1571 and got out at 1613. So we made about a $4,200 profit, and I'm quite happy with that. The most interesting thing that we did see today was the divergence or the difference in terms of price differential, which midweek was around $20 to $30. And as you can see, we're looking at spot gold down $3 and 1626. When we compare that, of course, to the futures of 1630, the spread has gone back to a very, very normal spread of about $4. Platinum was the only precious metal to close higher today, nominally up $1.30 at $738.40. Palladium did lose a little over 3.5%, about an $80 decline at $21.45. And then finally, silver lost about 1/3%, 5 cents at $14.6250. Now, that is all in light with the dollar that continues to fall. Take a look at this weekly chart here. It went from these highs here at 103 and then closed down right at our first retracement level that we've got marked here. We'll have to enlarge that to see that, but as you can see, that is the 0.78% retracement level. The one thing about the dollar is that when we look at a weekly chart, it tells us one story. We had 2 weeks that were up, and then we had this week that was down. However, when we enlarge this daily chart, you can see the kind of carnage we saw in dollar value over the week. Lastly, industrials did close lower on the day, and they had a fantastic week, just like gold, but we're looking at a drawdown of 915 points at 21,636 points. I want to start this weekend review by looking at the dollar, because the dollar had such a profound impact on gold. When we take a look at the highest price on this chart, it actually occurs on Monday. And we also get a doji signaling a potential reversal here, as well as what is called a hanging man. That would be this single candlestick here. Those two together were a pretty strong indication that what we were about to witness was a dramatic decline in dollar value. It, in essence, went from approximately 104, that's the high here, down to the close today near the lows at 98.36. That was highly supportive of gold, which gained about $124 in trading from Monday's open to Friday's close. That being said, we still saw gold close lower on the day to the tune of about $20. We can see that within this candle here. Considering the week, though, this being Friday, Thursday, Wednesday, Tuesday, and Monday, we opened really right at this point, just above 1,500. 1505, and then we close at this particular point here, which comes in roughly at 1630. So we did have quite a week. In terms of different levels that we're looking at in terms of support and resistance, first, we have to acknowledge that there have been multiple attempts over the last couple of weeks in breaching that critical psychological level of 1700. So we are putting our resistance between approximately 1704.06 and 1700. This week alone, we took 2 stabs at it, each time coming just shy of the brass ring, meaning closing above $1,700 per ounce. The other thing that is really noteworthy is what we have seen over not only this week but the last 2 weeks, and that is as this market came down in a defined correction, it hit these lows at around 1450, 1460, and that was followed by a break above the 200, then the 100, and then finally this week above the 50-day moving average. That signals that gold has returned to a short, interim, and long-term bullish trend. Now, we spoke about resistance at 1700. What about support? Well, my sense is that the first place that we genuinely do want to look at any kind of real support comes in at about the 38% retracement. So we'll say between 1600 and 1608 as a major level of support. So we have converted our daily candlestick chart into a Heikin Ashi Japanese average chart, and the key difference between these two types of Japanese charts are how they fix the open. In a candlestick, it is the true opening price. However, the open on a Heikin Ashi chart is fixed as simply the midpoint of the prior candle. So when we look at the open here, we can see that that matches to the midpoint. This will match to the midpoint, and so on. What that tends to do is to take noise out of the market and give us a true indication of trend as well as strength of trend, most importantly. What we can see when we look at this daily chart through the eyes of a Heikin Ashi chart is as follows. The trend was very, very strong this week and obviously extremely bullish. However, today's move down a little bit, although it's still green, you can see that we now, for the first time this week, have actually seen a lower wick. That's a negative for a bullish move. And then the size of the candle has shrunk to a near doji. It could indicate one of two things. It can indicate a simple area of congestion or consolidation, as we're seeing right here, before a move up. We can also see it as a dynamic illustration of a pivot point. In other words, as the market moves up, and here you've got a series of green candles, you get that doji and color change, and that's when we defined the downtrend that started in gold, and this, of course, occurred back at approximately the week of March 9th. Now, of course, when we look at our weekly chart, again in Japanese average or Heikin Ashi format, what we have seen is a defined downtrend for a period of time of about 2 weeks, and then a pivot candle, a green candle with a tremendous high and a tremendous low this week. The other thing worth noting is, with the exception of the beginning of the week in which we saw the largest rise in terms of price on gold itself, that over the last 3 days we have had a succession of lower highs and to some degree lower lows. We definitely had a lower low yesterday, but we've got about equal lows today. The other thing is that we saw tweezer tops occur, and they occurred right at 1700, and that also indicates resistance. In terms of absolute major support, we can identify a candlestick pattern simply called a tower bottom, and that would be these series of candles. They don't have to be equal, but roughly it takes multiple candles, 5 or more, and they should be roughly having equal lows for a bottom, equal highs for a top. Another way to view the market in terms of Japanese charts is a 3-line price break. That's what we have on now, and when we look at it, it is based upon a daily chart. We can see that we definitely still have a solid uptrend intact. There is no doubt, but all of the precious metals have experienced extreme volatility. Palladium probably number one. But silver has also experienced dramatic price moves from almost $19 down to $11 per ounce, and that is extreme. When we consider that just back in February, we were trading at about 1850, 1863 in that area, we then went down to just about 17, came back up to about 1720, and then actually broke below $12 per ounce, hitting a low of about, I would call it 1170, and that was just a few days ago. And then, of course, this week we had a pretty strong recovery in the market, that we are looking at an extremely volatile market in terms of upside levels of resistance. It's got to be about 1560, and then support comes in at around $13.90 to $14 per ounce. Lastly, I do want to take a quick look at Palladium, and Palladium futures have had a roller coaster ride. If you look at what has happened over the last, say, month, it hit this top above 2,800 and sank as low as approximately 1,400 over a period of about 2.5 weeks, and then recovered slightly, going up to about 2,300. This was 3 days ago, and then selling off mildly over the last couple of days. Today represents a $80 decline from the open on Thursday. It has broken through the 50-day moving average, and to me that is significant. And the reason it is significant is when we go ahead and compress this chart, we'll see that the last time Palladium traded below its 50-day or short-term moving average occurred in August through September of 2019, and that was only for a brief instance. We also get it below it in April, May, and June of the same year. We're going to go into the weekend flat with no active trades after pulling profits earlier this week of $4,200 per 100-ounce COMEX contract. We want to see if there is still a little bit more downside or if gold can find support. In either case, interim and long term, I'm extremely bullish. It's where it will go over the next 7 to 10 days that we'll really get an indication of at the beginning of next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for the next daily update and review. Bye-bye.